Hey traders, this is Blake Morrow with Traders Summit, and today we have Mark Newton from Newton Advisors. Mark, how are you?
I'm great, Blake. Thank you very much for having me on today.
It is great having you on, and I know I've mentioned this on other sessions that we've done together. You're one of those people I've seen over the last 10, 15 years that I'd find you on TV, I'd see you on CNBC or Bloomberg, and I'd always say, I like what Mark does. I like the way he approaches the market, and so I'm really excited to have you here today and talk about what you're seeing. But let me ask you this: what's your basic principle or your basic approach to the markets when you're trading?
Well, I think it's really important to know your time frame on what you're trading and really using a multiple asset type approach as opposed to just looking at a daily chart of one thing. I think I really try to tie everything together and looking at things like the S&P and looking at different sectors and of course the US dollar and treasury yields. I think a lot of those things tend to interrelate. So they're very important. And you get a feel for different assets on different time frames. That's really helps to put it all together, at least for me.
I think it does too. It's that confirmation bias when you're trying to trade. You're like, how do I pull the trigger? You're looking at different asset classes and make sure that they're confirming the move, right?
Yeah, look, I think each of us have our own time frame for trading and are also our own personality. I mean, some of us tend to be a little bit more in tune to day trading. Some are more swing or position traders, and others are longer term. And I think when you know your own personal strength, that really allows you to do a lot better than if you try to get outside your comfort zone.
100% agree. And one of the things that I love about like reading your analysis, whether it's on Trader Summit or I see you on TV, is really saying, hey, Mark's he's really cued into this asset class, and that makes sense based on what I'm doing. And so that's what I love to hear. I love to hear those types of things, when I'm reading your analysis. So let me ask you this: as far as today's market, we're at a. I know you look at charts, and you're obviously a CMT. So, what are you paying closest attention to right now? And is there a way you can show us?
Honestly, what I'm paying the closest attention to is technology and the effect of really a lot of these high growth technology and discretionary stocks known as FAANG. I think that given that these have shown such persistent domination within our indices and ETFs, technology is still 27% of the market. So for those that are trying to short the market, it's important to see this group really roll over, or else we're not going to have much of a case as to why that can happen. And so, I'm happy to share at least just one chart to kick things off. And
Yeah.
this is just a chart of RYT versus the S&P. So, this has been really the trend over the last few years, which has been sort of up and away, and it really started to gain strength after 2018. But really, since last summer, it's been sort of muddled. It hasn't been as persistent, and we saw a little bit of a downdraft from February this year into May. And many might remember that's really the time when China peaked out, also when Japan at least made it to peak, and also emerging markets. So there's a lot of things that happen in the early part of the year that I think have set the tone. Now, recently we've seen this group, of course, rebound, but now we're starting to stall out a little bit. We haven't really regained former highs, so I'm really putting a lot of emphasis as to watching what any sort of drawdown that we're seeing in the near term, what effect that has on technology.
I mean, how many portfolio managers own Apple, and what how big of a driver
Well, that's
is
a
that?
great point. And look, a lot of the PMs that own things like the industrials or energy discretionary, they've all underperformed badly because you almost have to own some of these stocks to be able to keep pace with the S&P. And so when people have the S&P as a benchmark, and Apple and Microsoft are 12% of the S&P, it's tough. And you have a lot of these sectors that simply have not nearly done as well. You have nearly half the sectors which peaked out between the months of April and June. And I think that's really interesting. Like, we have not pushed back to new all-time highs. And so, happy to show you, a couple of charts of those as
Let's
well.
please see them. I'd love to see them because I 100% agree with you. Technology is a driver, and at the day of recording, today happens to be September 14th, 2021. Today is Apple Day too, so
Right.
it might be a little bit moving the market as well. So what are we looking at here?
So this is just an equal weight ETF of consumer discretionary. I found it helpful over the last year to increasingly focus on equal weighted ETFs versus looking at just the regular cap weighted that are obviously very heavily dominated by the biggest stocks. And so when you look at XLK, you're really only looking at Google, Microsoft, Apple, Facebook, things like that. So discretionary, you can see, peaked out in the month of May. So we peaked out right around May the 10th. And what's interesting is that, you go along the line, you look at, say, materials, this peaked out in May, financials also peaked out in May. We attempted to make a slight move to new highs on a daily basis just a few weeks ago, but still, this has not really broken out. Industrials, same picture. It's been sort of muddled. It's been sideways. Communication services, many look at the popular XLC for communication, but if you look at EWCO, you see that, when you strip out the Facebook, that this has really been pretty flat since March. It hasn't done all that much. And really, more importantly, when you look at things like, transportation, you look at the leading sectors per se, those have really been, a shell of what they should be. Transportation peaked out in May and is now down, I think about 1,500 points or so from that peak. So here's a look at just transportation since that time. So not only did we break the uptrend from last March, but it's really struggled in its bounce attempt. And so when you see the SOX at the same level as it was back in February, March, the transports are down, it peaked out right near 16,100, and here we are at 14,170. So almost 2,000 points down just in the last 4 months alone. So it's a little bit of a concern, and it means that you really have to pay attention to what's working right now in the market, and or in this case, what's not working. In this case, the SOX is clearly the transports have been an underperformer. The SOX, to its credit, has managed to rebound a bit, but here we are in the SOX, and we're at what, 34.52. Back in May, we peaked out at like 32.69. So it's roughly 5% higher after a full period of a lot of churning. When you turn on the TV and markets are up every day, you think, well, technology is great. Well, certain parts, yes, but also certain parts, no.
And you're drawing the infamous one of my favorite actually technical patterns, an ascending wedge or rising wedge,
Yeah.
which those are really kind of ugly chart patterns, because if you're a bull and you keep chasing the market at new all-time highs or at highs, you kind of get your butt handed to you in a situation like that, and eventually the buyers give up.
Yeah, precisely right.
Yeah.
So a very big cross current this year. A lot of, and we've heard it all over the media. I mean, they finally have picked up on this, that it is sort of a game of musical chairs and internal sector rotation that we're seeing. It's not just a broad-based market rally anymore. A lot of breadth indicators are showing pretty persistently low readings right now on what's going on. Advanced decline peaked out in June. And so you say, when you hear all these things, you must be a bear, right? And I say, well, on the other hand, there's a high level of uncertainty right now and almost fear, And so yesterday, the CNN Fear and Greed Index was at a 37, which is far lower than it was last year when the indexes peaked. And also a lot of the DeMark signals, which I look at, also have been sort of stopped out on a weekly basis. Those are also they certainly have not worked as planned with a lot of the indices towards forming a peak. And so there are a few things that say, sure, we could get a near-term pullback, but until we see technology break, this is just an aging bull. And yes, we've moved now from more of a persistently higher high, higher low uptrend to more of a sideways market in the broader market. So it doesn't mean it's a chance to short everything, but it is a chance to pay attention right now as to what's moving.
All right. Mark, I love, again, how you put together the picture, looking at different assets, different indexes, and really putting it all together for us. Let me ask you one thing before I wrap things up here. If you had to be defensive, what would you be thinking right now if you had to be defensive in the market? You said, oh, we might get a pullback. Doesn't mean we're going to get a 20% correction in the market. But if you have to be a little defensive, where are you going to go?
Well, I think you have to go towards a lot of the pharmaceutical names, and they've been really beaten up badly the last couple of weeks, honestly. But you look at stocks like Pfizer, and this is, to me, a great opportunity to really buy dips in a company that has made a huge breakout back to new all-time high territory. And you pull back charts and just go back on a monthly basis since the early 90s, and you see the extent of what this stock has done. Many people know Pfizer as just being this sleepy stock that really goes nowhere. Well, obviously, since it became involved in a lot of the vaccines, we've seen a huge move up to new all-time highs.
Yeah.
And now it's pulled back in the last couple of weeks and actually given people a chance to really buy that dip. So I like Pfizer a lot. And I also would look at things like Bristol Myers within the pharma space, also a stellar pattern. Yes, you did see a breakdown this past week, but I'm just questioning how much downside this has. I think it might get to $60, and that's also something where, on a longer term basis, structurally, you want to own this kind of thing.
Awesome.
Utilities is one. You know what I mean? It's they still act well. Rates are still low, and I think you got to look at the home builders also. We're seeing a big home building, this big boom, and you really. These have gotten overbought, but you really haven't seen enough weakness to say that they're to be avoided. So, these would be my sort of go-to.
That's awesome. Well, I think those are a lot of great looks and a lot of great opportunities for traders out there. So let me ask you this, Mark, how do we follow you? And I know a lot of people are starting to read your analysis on the Traders Summit site, but really, how do I find you in particular?
So you can either go to newtonadvisor.com, which is a website that I set up about 5 years ago. As you mentioned earlier in the show, I work on the buy and the sell. I have worked on the buy and the sell side for the last 25 years, and I set up my own business 5 years ago to help institutions and retail. So Newton Advisor, without the S, is my website, and you can simply send an email to info@newtonadvisor.com, and happy to send you copies of my work. And I have set up a YouTube channel. I put all my videos. I do daily videos as well as a weekly webinar. They all go on YouTube. So Mark Newton CMT, and follow me on Twitter at also the same moniker, Mark Newton CMT.
And I think I want to say you and I have probably been following each other for at least 5 years, if not more like 10. So yeah. It's been a pleasure listening to you and seeing your analysis. And Mark, I really thank you on behalf of the Trader Summit community for being here with us. And guys and gals, you can actually get to Mark through the link if you're watching this video through the Trader Summit site. So Mark, thanks again for joining us today.
My pleasure, Blake. Thanks. And I hope everybody has a safe and happy reopening as we continue to make progress. And hope everybody has a great fall. So take care, everyone. Thank you.
Thank you.